Hello to all traders. Good morning, good evening, wherever you're watching us from today. Welcome to this free educational webinar provided to you by FXPRIMUS. I hope you're doing well and that you are doing all okay with trading. My name is Stavros Tousios and I'm the market specialist at FXPRIMUS here in warm Limassol. So our webinar is called Your Journey to Becoming a Day Trader. Okay, if you're planning to day trade, and I'll explain what day trading is. This is for you. If you're ready to, if you trade, you also have a lot to take from this, despite the style, despite if you are a short or long-term trader. Okay, so before we go to the first slide, I'll actually have to a legal obligation to read out to you a risk disclaimer. Please note that forex trading and trading other leveraged products involves a significant level of risk. It is not suitable for all investors. Trading financial instruments may result in losses as well as profits, and your losses can be credited to your initial invested capital. Before taking any such transactions, you should ensure that you fully understand the risks involved and seek independent advice if necessary. Any opinions, news, research, analysis, price, or other information contained in this webinar or linked to from this webinar provided as general market commentary do not constitute investment advice. FXPRIMUS or its representatives do not accept liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from use of or reliance on such information. Okay, that was quick. Let's get started then. We all know that trading is not for the faint-hearted, okay? It's not for everybody. And that really depends on certain qualities that could determine whether you will succeed or fail. Psychology is very, very important. Of course, I'm not saying that techniques, systems, and methods aren't, but the major qualities to success are mainly based on a number of personality skills that could be either already self-developed or that can be attained through practice and experience. Okay, those skills are transferable and could definitely help you in your effort to become a successful day trader. Okay, let's see the ones that are most important. Flexibility. This is the number one, most probably. With this, it also comes adaptability. Okay, when I say flexibility, I mean the ability of a trader to think beyond the rules and to ideas not only about the markets, but also to developing markets. You do know that the markets are dynamic, right? So if you're seeking to be more successful than you are already, if you are, then you need to look no further away than developing flexibility, while at the same time, of course, you remain firm. Okay, let's go to the next. Quality. This is consistency. Consistency is very important. This is your ability to follow your strategy rules, your methodology, and your technique, day in and day out, despite the changes in the markets and despite the changes in your emotional state. It ties very rigidly with discipline. At the same time, don't forget, the markets do change. Yeah, so consistently comes in a different form as well here, as your ability to be flexible would mean that you would have to change a method, a strategy, or a technique in order to remain consistent and in order to support your desired results, of course. Also, don't forget there's some bias, right? Don't let consistent make you never give up a strategy or a method that doesn't work. No, there is many strategies that are good. Okay, how well you execute those is what will determine whether you're a good trader or not. Next, we have patience, another important quality. Ask yourself, are you patient enough when you lose? Are you patient enough just before entering a trade? Are you patient enough when you have identified a potential opportunity that has not yet 100% given you a trigger signal? As a day trader, you must be able, or at least have the will to tolerate losses. Don't carry losing positions. Don't carry winning positions above the maximum potential. And of course, have the patience to achieve your financial goals. Okay. Next, self-control. Possessed or developed, either. This pretty much extends to being able to select the right opportunities that appear in front of you, as the fact that you only have the given day to make your desired profits or accepted losses puts a lot of pressure to your decision-making process. At the end of the day, the most important thing to remember is that preserving your capital is better than risking it in so-called opportunities that never existed. Next, we go to self-reliance, and this is just your ability to close all your trades. all your trades, I repeat, at the end of the trading session. This is what day trading is, right? Don't forget, if you hold a position overnight, you are not a day trader. And if you do so while you day trade, it means that you lack discipline. Finally, acceptance comes in when we talk about losses. There was some touch base mentioned just earlier. So acceptance simply is you accepting the fact that there will be losses and that there will be days that you may end up on the negative for the day or away from your weekly target. You have to be able to accept all those without overthinking and without adding to your emotional bank of thought. If you want to be a successful day trader, those 6 features are of high recommendation. Now, I think we can move to the next slide now. Okay, what do we have here? What day traders do right? Another interesting slide. Here's what they do right. They only trade a small portfolio of about 5 to 6 products. It's easy to monitor all pairs if it's Forex, and also have reduced commissions, as the majors normally have less commissions due to their large trading volumes. Okay, day traders trade only 2-3 hours a day. They choose what time suits them best, depending probably on volatility and liquidity or on the other timing constraints. They go into the market and exit once profits are realized or until they close all trades for the day. Also, they will trade longs and shorts. It makes no difference to them, as the moves they are looking to take advantage of are minimum and short lasting. That's why they use the short-term time frames of 1 and 5 minutes. Okay. Now, they do. Yes, it's true. Statistics say that they get around 80 to 90% winning ratio, the successful ones. The increased winning ratio, when you work on small profits, kind of makes sense, okay? But note that not all of them use stop losses smaller than take profits, okay? In addition, most of the trades last less than an hour. It depends, of course, on the strategy, okay? As someone who's trading just the news, for example, will only stay in the market for a few minutes, even seconds. Finally, they sleep like babies, okay, because they do not leave any trades open overnight. Neither they leave any open trades unattended while the session starts. When the session starts, they get to work for those 2-3 hours. That's how they have managed to succeed in day trading. Okay. Next slide. The sole responsibility of a day trader is to accept the facts as they are. Okay? It is not your job to understand why, but to grow on short-term trading. In order to do so, you have some responsibilities. 1, never, ever, ever leave any open trades overnight. In order to end the day flat, you must close all your positions at the end of the day's session. 2, another responsibility of day traders is to make a profit, even a small one, at the end of every session. And 3, keep the losses small and manageable. Now, these are very general responsibilities, okay, and guidelines for a day trader, but nevertheless, the steps to attaining to achieving some essential goals and become profitable and good day trader are pretty much those. These goals are: number 1, to profit consistently; number 2, to become better every day as you gain more experience and developing yourself; and number 3, to remain disciplined in your approach. So let's now see what a day trader is. Okay, why they do trade during the day and what day trading is not. Okay, let's take them one by one. A day trader is someone who is over with trading for the day at the end of the trading day. Okay, not doing so automatically categorizes him as a non-day trader. So positions overnight or carried through the next session are not allowed. A day trader must close all trades at the end of the day, even if he's in the loss or thinks that even he could make more profits. A day trader has to close his positions and ideally remain profitable, even marginally, by the end of every single trading day. Day traders enter the markets quickly and look into making even a small profit. Now, let's see why they trade. There is an opportunity to maximize your trading capital when you're not holding overnight positions. Swaps, and the fact that you're not looking at your charts, add a downside to the risk, as news or any other fundamental or market-related developments may occur while you sleep. Okay. This, of course, could work on your benefit, but letting a trade open, hoping it will turn out to bring you profits, is gambling. Also, another reason day traders like to day trade is because they somehow are forced to close any positions they have open, whether this is a win, draw, or loss, which in its turn makes them manage risk more effectively, as no one would want to close a large losing trade. So instead, they keep the losses or stop losses small to avoid being hit hard from exits. Okay, another reason is because day trading will provide you with feedback in terms of your P&L, and not only much quicker than long-term trading. Okay, it is very important because quick feedback means quick development, as the day trader will be able to identify mistakes done on a daily basis and have the time to work on them immediately. Finally, another reason to day trade is the faster development of a trading system, as the availability of information, as we just mentioned about feedback, is more often at the end of every session. So it is possible to test much faster and increase the reliability of your system. Now, let's see what day trading is not. Day trading is not investing. Okay, investing is considered to be longer term trading. It's not gambling, as few think. In gambling, odds favor the house. In day trading, the odds are even. And also, don't forget that normally it's a person problem. It's not the markets. A disciplined and well-prepared trader will not gamble. Next, day trading is not guaranteed to make you profits. Okay? But if you are well prepared and have a good size starting capital, the chances of success could increase for you. Day trading is not more dangerous than any other trading style. Actually, we have identified earlier that the fact overnight positions are not held open reduces risk, right? Last, day trading is not easy and can become very stressful knowing your capital is at risk. Day trading is a crazy business. Traders work in front of their PCs, laptops, and monitors, possibly from the comfort of their home. Tempting, hey? Well, it's not that easy. Although you could make big money, you could also lose a great amount of money too. Day trading requires quick decisions, as the purpose is to execute many trades that generate more small profits. Day traders do not make profits from hedging, okay? They speculate. So that is, they make profits or incur losses from price changes, while hedgers protect against price change. So it really is important that they remain disciplined to day trading. In essence, close traders at the end of the day take small profits, place many trades, manage losses, etc., so that they can actually commit to trading as a business. Okay, day trading or trading in general is a business and should be considered as a business and not done as a hobby. If you want to do it part time, that's okay, but again, it's got to be done properly. Day traders set goals in order to achieve their daily targets, and they prepare and plan their trades and what hours they will be trading. Working with a small portfolio of instruments helps with keeping the focus and avoid brain fog so that they can easily manage their positions, whether those are winning or losing. Finally, day traders always evaluate their daily performance, identify mistakes, if any, and make amendments on the next day's plan in order to be able to hit their weekly targets. Next, we're going to look at what makes a good day trading asset. Starting with liquidity. Liquidity is the ability to buy or sell an asset at large quantity without affecting the price levels of the underlying asset. Day traders need liquidity to get in and out the market quickly. Okay. Now, volatility. Volatility is how much the price varies over a period of time. So it tells you how big price fluctuations are, and you can either use it or not depending on the variance. Okay. Volatility is measured in standard deviations, hence the use of the Bollinger Bands to measure volatility. One standard deviation is the price variance from an asset's average price. Okay. In essence, the distance between the middle and top or bottom Bollinger Band. Day traders need volatility, the standard deviation and variance to make more gains. In terms of capital requirements, it's not necessary to invest a ton of money to begin trading, okay? But you do need as much as possible to ensure you can place many trades and lose them. Yes, no one will stop you from trading less or more, okay? Risking much or not. But a good trader will most likely want to avoid any emotions. So deposit what you feel comfortable losing. This is a risk capital. Okay. Lastly, day traders, at least most, make profits either by trading too much or by taking small profits, or both. In order to trade in the market, one will need leverage and good margin requirements. Margin is the money you have in your account that you borrow against. Okay, for example, when you use a leverage of 50 to 1, for example, the margin percentage required is 2%. Okay, that will be 2% of your remaining equity. Next page. Onto this slide, we will look at what day traders need to do in order to increase their chances of becoming more successful. Okay, I like to call this a top 10 X rule. So number one, stay updated with the market environment. Okay, so don't give up on the fundamental analysis early. Okay, I know it seems too much at the beginning, sometimes even boring, but don't give up on it. You need to know the current environment. Number two, learn when to monetize opportunities. In essence, what time are best for you to trade? Number three, know the schedule for the daily reports and news expected and the times. So reviewing the economic calendar is a good initiative. Number four, don't get emotions get in the way. You can do that by creating a trading plan and sticking to it. Number five, and since markets are unpredictable, make sure you are ready and prepared for the worst case scenario ahead of time. Number six, avoid getting into trades close to the end of the trading day, as the markets can only move so much during the liquid session. Okay, and since it is close to the end of the session, you may have to close very soon, taking a profit or a loss, but it depends on timing constraints, not on a target. Okay. Number seven, always, but really always use a stop loss. Start doing it and it will soon become a second nature to you. Okay. Next, number eight, avoid changing stop loss and take profit levels if you use them. All it does most of the times is turning small losses into big ones, and you do know what I mean. That, of course, assumes that a proper stop loss was not placed initially, right? Last, number 10, keep a journal and update it at the end of every trading session. Look through your trades, identify your mistakes, if any, think of ways to correct, write them down, close your journal, another day tomorrow. Okay, types of risk. Let's talk a little about risk. Okay, so risk in investing, trading, and gambling. Okay, for those not familiar, is the measurable likelihood of loss. I will repeat, risk in investing, trading, and gambling is the measurable likelihood of loss. Now, when one is investing, he's putting money at risk in order to get a return, correct? Correct. So, investing looks at the long rather than the short term, okay? Now, in trading, one, generally speaking, does not need to take a lot of risk on each trade. So that minimizes the likelihood of putting all the risk capital at risk. Also, traders don't really analyze, they trade what is on their screen, okay? Small price fluctuations, that's it. Now, in gambling, money goes in the hope of a payoff if a random event turns out to benefit the gambler, okay? Gamblers bet without any regard for the risk or return characteristics. So there's a differentiation between those three in terms of risk. Okay, now risk and return, or reward, you may call it. Make sure you understand that the return comes in a different form related to the risk taken. Maybe you think that as long as I get a return, I don't really care, but that's the wrong way to go about it. Okay, your reward must worth your time, your effort, and the risk you take in order to make it. So make sure it's always better than what you're willing to lose. With this, it comes opportunity cost. Opportunity cost is a return you could get doing something completely different. Okay, for example, what is more profitable? Working full time at your current job or trading? Ask yourself, does it really worth doing? Make sure you are honest with yourself. Okay, next is the business risk. Business risk is the uncertainty of the timing of your cash flow. Okay, you never know when you get returns. That's the problem. You never know when you will have losses, and you never know if you will just lose everything. Obviously there are ways to protect against losing everything, okay? Don't forget to include your costs and a salary for yourself, okay? Finally, personal risk. This is about you. Not that the rest wasn't, but this is personal. And that you become once you get into trading. Okay, trading is very stressful, and believe me, the only difference between winners and losers is psychology. So it's how much stress you feel and how you resist stress. Basically, make sure you understand the personal risk of trading before quitting your job to invest or trade. Okay, I've been there. On this slide, what do we have? Okay, setting up for trading. If you are going to trade, you need a broker to execute your trades, your orders. Okay, some traders may open different accounts with different brokers for various reasons. Their strategy requires them to. They are testing which ones offers better spreads, execution terms, etc., or it's even a hedge account, which is not required for day trading, by the way. There is different types of business models. Okay, what you want to look for is STP, straight through processing, and ECN, electronic communication network. In terms of equipment, you will need to have a place to sit, a place to work, right? A big screen and a good PC and a very good connection to the internet. Make sure you also look at some firewall and virus protection while you're at it, and don't forget to get a screen that won't ruin your eyesight, okay? Do regular breaks away from the monitor as well. Now, the next is a little tricky, okay? There's tons of free material online and also educational courses coming from any sources online, okay? Don't forget, no one will give you something for free. No one will give you something without return. So it's most likely been produced without much detail, or if it has, there's a catch most of the times. Now, if this comes from your broker though, that's different. You can trust it, you can use it, and I would suggest you can read it, you read it all, okay? It's there to help you. Now, going into the paid stuff, please be very, very careful. Don't fall for something you'll never even find out if it was a scam. Okay, a few tips. Make sure you research the provider very deep. Brokerages do have people that can help you with your trading decisions. Take you, once you become some sort of VIP member. For example, you can get access to me via Skype and also have free educational sessions with me if you become a VIP member with us. Next, newsletters and trading recommendations. Yes and no. Be very careful. Most of the recommendations, or else called signals, are not to be trusted. Onto the newsletters, make sure they come from a reputable source or stick with the ones you receive from your broker. Okay, brokers are regulated. Most importantly, do your own research and do it well. Don't be bored. It's important. The internet is a place that can't be trusted nowadays. Doing your own research is suggested. Okay. Another part of the setup. You need to be able to think about how you will manage market stress. We talked about stress a little bit earlier. Don't forget, the fact that you work from home isn't your advantage always, as you're probably working alone. You have no one to tell you otherwise. Okay, so panicking and getting depressed is easier than thought. There's some ways in controlling your emotions, and that is by creating a sticking to a charity plan. I know it's easier said than done, but it's not too hard. Managing your emotions can greatly improve your performance. You'll be surprised. You could exercise, meditate, socialize, get new hobbies, anything you like. Sometimes it's good if you turn to chat rooms as well. See other traders' opinions, chat, learn, but be careful. Choose wisely because you wouldn't want to be distracted. Another important point with respect to setting up for day trading is to plan for your profits. And what do I mean by that? I mean, have a plan for what to do with your profits. Are you going to trade it, withdraw it? How often if you will withdraw? Okay, or all of the above. Know that the biggest winners and the biggest investors of all time are the ones that they use compounding interest method. If you don't know what this is, it simply is a return on your return. Yes, as simple as that. Last, evaluate your performance before you trade. So pretty much evaluate your strategy during the day. So pretty much tracking your trades, and after your trades, okay, which is your overall performance. Please give me 1 second. Drink some water. Thank you. Now let's see some good reasons to day trade. 1, you love being independent, okay, being your own boss and taking decisions for yourself. 2, You're decisive and persistent, which means you can quickly assimilate information into a strategy and make a decision to act on it fast, as day trading requires. 3, you can stay in the market through rough times, so being able to stick to your strategy despite a series of losses, assuming you can afford to lose some risk capital, of course. 4, you can better handle stress of losses. That's only understanding that losses are expected. That way you may be able to make better decisions. 5, you can afford to commit to your trading, uh, dealing with winners and losers, and sticking to your plan so that you can build a long-term asset. 6, you have studied trading systems and know what works for you so that you can define your trading system too. Okay. 7, you have experience in investing and can easily understand what can happen that can cause you to make or lose money. 8, you love the markets. Good traders have always been fascinated about how the markets move, and the markets are amazing, aren't they? Price of a currency exchange just gives you all the information you need about the state of the world and the future expectations of an economy, right? You make some future predictions for yourself, trade it, and potentially make some returns. That's how amazing the markets are. Next, you can afford to lose money. Okay, obviously you are a day trader because you want to gain from it, but the risk is also high and money can be lost. However, it's better when you can afford to lose money, as the risk is easier, sort of, in that case. Okay. Lastly, you want to work anywhere you like. All you need to day trade is a computer, an account, and internet access. Take your mobile, for example. It has all three. Take a laptop, that's even better. You can take it on a trip and still be able to do what you love. Now, if you want to learn investing by trading, it's probably not the right idea to go and become a day trader. Those are two different things, and we did differentiate them earlier, right? If you love fundamental research and crunching numbers, again, maybe not a good idea, as day trading is all about profit opportunities and short-term price movements. A bad reason to start day trading: wanting to save more money. We all know you probably get to some rough times as commitment of both time and money are necessary. If you save money for years, keep it there until you learn how to trade properly. Don't go in blind. Okay, if you like working as part of a group, you're most likely going to feel miserable, blocked, and locked in your room, or you know, trading by your desk alone. It's not a good idea either. If you can't be bothered with the details of running a business, don't bother at all. I want to add anything to this. This is as clear as it can get. Next, if you love the casino, it's probably not a good idea to start day trading, as it can become quite addictive. And when you love to beat the odds, trust me, it won't turn out well. Number 7. Now, if you're impulsive and all you think is about triggering and see what happens and deal with the consequences later, trading isn't for you. Number 8, if you procrastinate, it means you're probably going to hit the wall, setting boundaries and becoming disciplined. Day trading is all about closing all trades at the end of the day. So if you can't do it, don't start it. The most usual reason, at number 9, you want to get rich quick. If you're not patient and persistent, you'll never be. So wanting to get rich quickly is exactly the opposite to day trading, because day trading is about trading a large number of trades that make a small profit. Okay, and last, a funny reason, someone told you to. Someone told you, hey, there's a lot of money that can be made in trading. There is people that make millions, you can do it too. Like anything, too good to be true. Let's go on the next slide. Okay, day trading is tough. Okay, starting with unrealistic expectations is the worst start you can do. Most traders do lose money because they think they can make tons of money on one trade. No, not a good start. A good start would be starting with a trading plan. Okay, so not having one, you can't measure success. You can't specify what you need to do. You have no targets, and then you fail to manage risk, obviously. Day trading is risky. Okay, sticking to the trading plan will help you with managing risk. Now, if you don't commit the time and money to do it right, unfortunately, it won't last long. Your effort to this and your dedication to study the markets and understand how you react to them could help you remain in this business. Everyone else looks at the same data and information, okay, that you look. The changes that good traders follow their rules and the market. Bad ones follow the rest of the herd. And once the markets go against them, they start overtrading. Day traders don't hold positions for long periods, whether they win or lose, so the risk as well as the returns are minimum. Day traders who trade too much will probably lose. Another mistake day traders could be doing is that they stick too long with losing trades. Okay, good traders have systems in place to limit their losses. Okay. Last, getting too emotionally involved because of the high stress environment of day trading. You increase your chances to become more susceptible to fear, doubt, greed, and hope. Nope, not good. What day traders want to do is detach from the market. Okay. Now let's look at some myths or common misconceptions, if you may, about day trading. Day trading does not work. Wrong. Day trading takes skills and the right temperament and can be incredibly profitable. Day trading is a zero sum. Wrong. Indeed, for every trader that wins, there is a losing one, but overall net profits are generated. Next, day trading is an easy way to make money. Really? Wrong. Day trading is far from easy and it's not for the weak-hearted. Okay. Next, day trading carries huge risk. Wrong. It's only as risky as you want it to be, and experienced traders know how to manage risk effectively. And lastly, day trading is gambling. Wrong again. Doing the opposite of gambling is what makes profit for day traders. So day traders are anything but gamblers. Okay. Now, maybe you like what you hear so far or the idea of trading, but you decide that this doesn't really work out for you. Well, here's some alternatives for you. Okay. Proprietary trading for an investment company or a hedge fund. This is an alternative when you want, for example, to work for someone else. Okay. Trading for a commodities company. This is the options and futures markets actually, and because of their trading style, it is common that they need people to help them. Then joining an exchange is another option. This is if you want to be close to the action, but no, this is a very costly option. Okay. Next, invest in your own account. In essence, don't be a day trader. Look into long-term investing and manage your own long-term account. Join an investment club is another good option as you acknowledge that you may be the one whose fault it is that you lost, or if you know that you don't know much yet. It is usual that a day trader pays others to learn, but as mentioned earlier, do your due diligence. If you think short-term trading and the stress surrounding it isn't for you, take a swing at swing trading. It's a longer-term investing where you can let trades run overnight or for days. Lastly, open a demo account and trade in order to practice, or even to see whether this is something you enjoy doing or not. It costs you nothing. Okay, we offer practice accounts. Take advantage of it and check out for yourself if this is what you're looking for in a broker as well. Okay. Okay, now since we talked about the different types of trading or exiting the markets, if you may, I've put together a slide to differentiate short and long trading, the pros and the cons. Okay, so let's take day trading first. In day trading, you have the opportunity to make big gains as it involves making many trades in a single day and taking small profits or small losses are expected as well. Of course, you have to become an expert to be successful. Okay, you can be your own boss. Typically, day traders work alone independently from firms and probably from home. So you decide when to trade, how to trade, and whether you can have the day off or work from the coffee shop across the road. Okay, it's up to you. Next, in order to learn how to day trade, you don't need to spend a fortune for the opportunity. Okay, expensive education or some sort of university or college degree is not required. All you need is time and patience. Last, since you're working for yourself and assuming this is your own job, you don't need to pay taxes. Okay, at least that's the case in most European countries. You can search for tax-free plus Google plus countries on, tax-free plus Forex plus Google on Google, and you can find out for yourself. Okay, I know capital gains are not taxable in Cyprus and the UK. Now, let's look at the cons of day trading. There's, of course, a risk for large losses too. Okay. Truth is, most day traders will incur large losses until they get to a level where the profit surpasses those. This is what the statistics say. Okay. Second, there is a significant cost on a powerful PC. Okay. Of course, it does depend on your strategy, but you will need a state-of-the-art computer to support your strategy. And last, there's high level of stress and the risk of burnout as the need to continuously look at your charts and quickly decide on trades can become very frustrating. Okay. Long-term trading now. Let's look at the pros first. Number one, you can either do it part-time or full-time, as you don't have to continuously monitor your charts. Okay. Long-term also offers a great potential to make large profits, as trades can be held open for a longer period of time, and time for the market to develop into the direction of your trade plays in. It is a little less stressful than day trading, as as most do it part-time, but also it doesn't require that you constantly search for opportunities and take quick decisions. Lastly, on the pros, it has a lower cost of opportunity as well as a lower setup cost, as it's not necessary to place many trades or act quickly. Now, onto the cons. The margin requirement is high, as trades are at least held overnight. Typically, long-term traders use higher leverage than day traders. Subsequently, the higher leverage could lead to higher losses as well. Okay, so since long-term traders don't want to lose out on opportunities, large deposits are being made with a starting capital. Okay. Now let's go into talking a little about the brokers you use and safety of funds. Okay. Of course, the first thing to look into is regulation. There are brokers still out there that they are not regulated or they are regulated poorly. So depending on the financial authority that regulates them, it's not even a financial authority, I would say. In Europe, you need to look no further than MiFID, CySec for Cyprus, FCA for the UK, BaFin for Germany, just to name a few. Okay, ensuring the safety of your funds is very important, and the parameter of segregated accounts is what one should look when doing his research, along with checking the regulatory body, of course. Okay, now what else you could look into is where are the headquarters of the company, if they are regulated in the country of establishment. Look at how many years they have been in the market, which is very important, of course. Okay, the more the years they are in the market, the better. Okay, and also at the web rating, at reputable websites. Offering client fund insurance as well is one parameter that should not go unspotted either. Now, on the business side of things, one should look at what type of business model the broker runs. Okay, I mentioned earlier that you should look for STP and ECN brokers rather than market makers. Check how many pairs they have, and in general, how many instruments they offer. As the more there are, the better portfolio diversifications one could develop in case needed. So if they offer a free non-time bound demo account so that you can test their platform, execution, spreads, slippage, and generally speaking, everything you need to do that satisfies your needs, do go ahead, open a demo account. Okay, so now as a day trader, you want to check spreads and commissions, especially for the euro dollar pair. Okay, ensure you read the terms and conditions. Don't get tied up in a bonus that you never asked for, because you didn't bother reading the terms, right? And so that you have a clear view on what you can expect. You will also need a good leverage, as the money you need to borrow in order to trade and the fact that more than one trades could be open at the same time do require leverage that your broker may not be offering. Always read the terms on this and on margin requirements. Okay. Less importantly, look at the minimum and maximum withdrawals you can do, the method and the deposit options available, as well as the duration of a withdrawal reaching your bank account. Lastly, if you're a novice, make sure the broker offers a wide range of free educational tools, has an education section and ebooks, as well as the option to get access to market experts. Now, on the technological side of things, when we're looking at the broker, I would like to, for example, personally, I would like to know how many platforms my broker has available for me, MT4, MT5, WebTrader, etc., to ensure they have what I need. In terms of execution, check where the company's servers are and whether their execution is fast enough for your day trading activities. Don't forget, as a day trader, you want something very fast, along with a fast, reliable internet connection, of course. Test the platform and the slippage, as this could reduce profits or increase the losses. Okay, see how often it is. Don't forget that execution is very crucial, okay, as it affects slippage and the size of the spread. Know that ECN brokers offer the best execution. Okay, ECN. Another thing for the algorithm traders, check if they allow expert advisors and scalping. One way to day trade is scalping, so ensure you're allowed to scalp. Since all you need is access to the internet, and despite most brokers do offer it, check whether your brokers offer mobile trading. Know that most retail traders nowadays do trade via their mobile device. Okay. Another thing to check is how responsive and informed the customer service and customer support is. As a day trader, you may require for an issue that requires fast response. Okay, so if you are not too much of a trader yourself, you could also look at whether they have PAM and MAM accounts offering, which is basically connecting to master accounts and allow the master traders to be replicated into your account. Okay. Last, this is for experienced traders that want to take their home business a step ahead. Check for API. This is ideal for traders that like to automate their trading strategies. Okay, now I do know we have mentioned most of those before, but this is an important part of identifying your trading costs as a day trader. Okay, cost of day trading does reduce the availability of funds and should be considered as a top priority, especially when this occurs on many trades daily. Spreads. Some brokers charge trading spreads that are typically larger than the cost of the spreads on the three major pairs: euro dollar, dollar yen, and pound dollar. So as those are the most liquid, they mostly have the lowest spreads. Maybe that's a good idea for pairs to include in your portfolio. You decide. Also, some brokers do have different types of accounts, and those have different types of commissions. Those are variable and fixed, and they normally depend on the initial risk capital invested with the broker. Trade commissions are charged by some brokers or not charged by some others. The ones that charge low commissions are the ones to look into. Okay, normally $10 per lot is the standard for the industry. Some brokers that charge trade commissions charge very low fixed spreads or none at all. Next, deposit and withdrawal commissions. We don't like them. They are reducing trading funds, and that is why they are considered important. This also depends on the method you use to deposit, of course, okay, or use to withdraw. Swaps. Swaps are there just for information purposes because they're not an issue in day trading. But in case you ever change your mind about day trading, check this out too, as you wouldn't want to have to you wouldn't need to change brokers. Okay, so the swap charged affects mainly swing and position traders. Ensure you read the terms and conditions on swaps. Okay, now back to the day trading theory, okay, and mostly concerned with how one could become more successful in day trading. What are the stages to success in day trading? First and foremost, staying focused on what you need to learn. Please note there is no particular order in this, okay? So, number one, staying focused on what you need to learn. And this is definitely not learning how to make money, okay? But rather it is mastering the steps to achieving your goals and not the end result. So you need to focus on the market behavior, what the market is giving you, and what you take away with you. Also, learn how to execute a trading system flawlessly. That is the most fundamental component of a successful trader and probably the most difficult to learn. Next, learn how to think in probabilities so that you can determine what the market is likely to do next. Start using your reasoning skills and intuitive powers in order to do so. Now, that's the second hardest. Learn how to deal with losses. Predefine the loss in every potential trade. Predefine the loss. I repeat. What I mean by that is determine what the market has to look like to tell you that the trade no longer represents an opportunity. Okay, at least not in the time frame you are looking at, maybe in a different time frame. Focus on learning what is important for you. For example, becoming an expert at just one market behavior. Okay, there is so much information, and because so much of that information is conflicting, it just creates confusion and overload that will ultimately lead to losses. Now, close to self-discipline. Learn to monitor yourself. Set rules, follow them, and constantly keep asking yourself if anything has to happen when you are in a trade. Obviously, you want the trade to go in your direction, but that doesn't have to happen. There is no guarantee it will. Okay, at that stage, monitor your feeling, monitor the level of commitment to what has to happen, and once this rises, keep telling yourself that it is alright for it to happen. Okay, that will increase your confidence in your ability to respond appropriately and to your trading system. Next stage is to be objective. Learn how to be objective. In order to become objective, you need to forget about expectations, okay, and look them as probabilities. Lastly, exercise. That is, practice on a demo account. Treat the money as real as much as you can, and by following the steps above, you will take an idea of what's like to be a successful day trader. Now, in this slide, we will look at the stages of becoming a successful trader. Consider this as a bonus slide as it applies in any sort of trading, okay, as well as day trading. 1. Create your experience of the market. Indeed, you may ask, well, it is the same market for everyone, but how we perceive it is different. Okay, whether you perceive the current market condition as an opportunity and didn't act on your perception, or didn't realize it was an opportunity until after a move, is a direct reflection of your experience of the market. Okay. 2. Perceiving opportunities. That is a function of the insight into the market's behavior and synonymous to your expectations of what the market will do next. In order to perceive opportunities in a much more effective and accurate way, um, you want to learn to work with different time frames to be able to visualize the different perspectives of market activity. Okay, it's called multi-time frame analysis. Executing your trades, simply the ability to do so, but don't forget it is a function of fear or the lack of fear. And fear is a result of your beliefs, or better said, your perception of the market's um, sure to come activity. So ensure you create a good experience of the market and fear will subside. Next, accumulating profits. Based on your ability to perceive opportunity and execute a trade, you will pay out yourself. Okay, I will repeat this. Based on your ability to perceive opportunity and execute a trade, you will pay out yourself. The market doesn't pay you. Okay, you pay yourself. Your ability to accumulate profits is a function of the degree of your self-valuation. For example, what really stopped you from entering a trade when the opportunity was there, according to your trading system? It is either fear or your belief. Okay. Last, personal transformation, growth, and learning new skills are a function of self-acceptance. The more of those you attain, the more the market will reflect these mental conditions. Okay, use it. Now, let's see some techniques that have been used from traders that help them change and become experts, or let's say successful traders, if you may. First, make choices that support your belief. So, in essence, support what you want to achieve by trading. And the best way to do it is to figure out the how. Okay, wanting to figure out the how. The second continues with asking yourself some questions. Those will help you identify some beliefs that may argue against your you giving yourself money. For example, what do you believe about greed? How do you know when to feel greedy, and under what situation would you feel not? Okay, what would stop you? So you get the point, right? Now, writing the choices you made, the questions you ask yourself, and the answers to those is very effective way to effect change. You willing to write those down will direct your attention. Okay. Next is all about developing self-discipline. We all know what it is, right? Let's say you want to lose weight. This is a conscious goal. Okay, you start believing it's so hard, and you believe is then in conflict with your goal. Your attempt to act on it will show you how disciplined you are, depending on how much you resist or follow through. Okay, if you want to help yourself get what you want, you will have to train your mind to resist. Okay. Now, some other techniques that help with developing self-discipline is self-hypnosis. Yes, you're probably surprised, but many people and also traders use it to establish new beliefs. Those are normally audio files that can learn you how to cut losses, how to close trades, trust your decisions and others, just to name a few. Okay. Finally, similarly, in terms of the end result, positive affirmations could make you thoughts turn into beliefs. For example, if you're not disciplined enough, you could keep repeating, I am becoming a more disciplined trader every day. Every time you start having thoughts about, for example, closing a trade, that makes you think you abuse self-discipline, right? Say this and it will probably stop you from doing the wrong thing. And lastly, this I remember is the last slide. We're going to get back to day trading and see the different strategies used to day trade. Okay, number one, the most used technique to day trading. The goal is to take profits and as fast as possible. Okay, this is scalping. Scalpers enter and exit as soon as their position becomes profitable and move on to the next opportunity. Number two, fading. This is when traders short at overbought levels and buy at oversold levels. As investors, we'll start taking profits at a predetermined support or resistance or oversold and overbought level. This technique is risky due to the possibility of a breakout. However, the return can be big. Day traders using this technique exit as soon as the market reverse. Okay, reverse. Let's call it. Number three, day trading with daily pivots. Here, traders look to benefit from volatility. Okay, again, they buy at low, sell at high, and exit as soon as there's a reversal. However, they do so around the daily pivots. Number four, momentum day trading. In order to trade on momentum, day traders look for news releases or strong trends that are likely to move the markets. They buy when they see bullish candles, sell on bearish, and also work on bearish and bullish patterns, candlestick patterns. Okay, they typically use the volume indicator to identify an increase or decrease in volume. Finally, the last technique used by day traders is news trading. News events can cause huge moves, enough to make very good profits quick and stop for the day. Typically, day traders using this technique remain updated with the markets and the news as opportunities on political tension, on news announcements, and other unexpected news, besides the economic reports, may occur.